I want to tell you about a company that did everything right. They declared their rental income honestly. They kept the right records. When KRA audited them, they opened every file and handed over every document that KRA had requested. But they still ended up with a 76 million tax demand. And this happened because KRA decided to ignore the company's record and use a different method entirely to calculate the tax. And the courts have now said that that was completely inappropriate given the circumstances of this case. And here's something that you may not know. KRA has the legal power to be able to use indirect methods to estimate your income. One of these methods is a banking test. And this involves looking at all the deposits that have been made into your bank account and treating all those deposits as taxable income. Now, that may sound very reasonable as a last result. But as this particular case is going to demonstrate, when a landlord with all the complete records and you hand over all those records to KRA, the courts have something to say if KRA wants to use that method. And in this case, the court introduced a concept that has become very important in Kenyan tax disputes, and that is the pendulum of proof. And understanding how that pendulum swings can change the outcome of your own dispute. By the end of this video, you will understand exactly when KRA can use the banking test, and you will also understand when they cannot. And ultimately, you will understand what that pendulum of proof means and how you can make advantage of that pendulum so that it swings in your direction. Let's get into it. Traneshvi Limited owned and managed several apartment complexes in Nairobi. They were managing the Viraj Apartments in Kilimani. They had flats in Ngara, they had Viraj Gardens in Kileleshwa, and they had many different properties. The company's income came from renting out apartments, and these were under a renewable 11-month tenancy agreement. Now, the company, on one end, had declared a total rental income of 286 million for the years 2015 to 2019. But in 2018, KRA had audited the company for the years 2015 to 2017. And when KRA did this, they found nothing that was bad. So according to KRA, everything was in order. And because of this, the company's director breathed easy. But in May 2020, as President Uhuru Kenyatta was extending the nationwide dusk to dawn curfew, and he was implementing those partial lockdowns, and for you, probably in the house watching TV, KRA launched a fresh investigation to the company. They made an impromptu site visit, they interviewed different tenants, and after doing all these interviews, they demanded a large volume of documents from the company. Afterwards, the taxman demanded a large volume of documents from the company, and the company cooperated fully. They handed over all the tenancy agreements that had been requested. They handed over the receipts for all the rent. They also handed over their audited financial statement. They handed over their ledgers. They also handed over their repair and maintenance voucher, payroll record, NSSF, NHIF contribution, and even handed over sale agreements from some of the apartments that they had sold. Because according to the company, they had nothing to hide and they proved it by hiding nothing and handing over everything to KRA. It's like practically opening the door, sitting back and asking KRA to come in and have some fun. Now, as COVID ravaged the country, the taxman was busy. In May 2011, KRA issued preliminary findings demanding around 43.8 million in additional corporate tax. The company couldn't hide the astonishment. They had, in their minds, provided everything that KRA had wanted. And because of this, the company objected again and provided detailed reconciliations that were showing where every single shilling that had been deposited in their bank account went. In all this, either they could show it was either declared as rental income or as an untaxable receipts, like refundable security deposits, because you don't tax those ones as they are not a revenue for you. The company explained that KRA's banking test had treated even capital receipts that they had received as revenue. But even after explaining all this, KRA was unmoved. In January 2022, the tax demand was increased to 76 million. This, to the company, was crossing the red line, or blue, or whichever color you think of. And that is why The company appealed to the Tax Appeals Tribunal. Armed and ready for battle, both gladiators presented their case. KRA went first, and armed with swords, the taxman gave the battle everything that they had. The company, on the other end, with a very good sword and a shield, was just as prepared. For every attack that KRA brought, they defended and defended very well. For everything they got, they pushed back. And every time they pushed, the spectators celebrated. This was a fight that the Roman gladiators would have watched in awe. And as the curtains fell on the fight, the tribunal looked at the notes they had made. In their review, the lawyers showed that every bank deposit had been matched to a source and that every expense that had been charged was supported by receipts and there were vouchers supporting that payment. And in all the argument, they said that KRA had never pointed to a single specific document that was missing, or KRA never pointed to even a single figure that was wrong. According to the company, KRA's banking test had simply added up all the deposits that had been made and called them income. But this is a method that should only be used when no records exist. More so, the company showed some of these deposits include security deposits from tenants. They also include proceeds from property sales, and neither of these is necessarily rental income under any reasonable reading of the law. Now, on July 14, 2023, the tribunal ruled in the company's favor. The banking test was rejected. The deductions that had been made for items like repairs and salaries for staff were treated as an allowable cost. And because of this, the entire 76 million demand was set aside. But defeat doesn't come easily with KRA. And KRA wanted a second round. And they didn't want a second round of talks. They wanted a second round so that they can be able to mount another proper fight. And that is why KRA appealed to the High Court. In the appeal, they argued that, amongst other things, the tribunal had shifted the burden of proof to KRA. And the High Court listened. And the court listened attentively. And when the KRA was done, Justice Kariuki addressed the concern from KRA directly. He confirmed that Section 56, subsection 1 of the Tax Procedure Act, this places the initial burden of proof on the taxpayer. It's up to you as the taxpayer to show that the assessment from KRA was wrong. But the judge embraced what we call the dynamic approach to the burden of proof. And this is what is called the pendulum principle. And according to the principle, once a taxpayer produces credible evidence that the assessment done by KRA is incorrect, the burden then shifts again to KRA to identify specific gaps or identify inconsistencies that are present in that evidence. KRA cannot simply assert that the taxpayer is wrong without proving using the documents that have been presented. According to the court, KRA must engage with the actual records that have been presented and show where specifically those records are wrong. And the company in this case had furnished voluminous supporting documentation, and for all that documentation, there was nowhere that KRA had identified a single gap. And for all those documents, there is nowhere that KRA had identified a single gap or an area of inconsistency. So according to the High Court, the tribunal had been correct. And because of that, the High Court dismissed KRA's appeal on September 26, 2025. And the reason here is the banking test is not a legitimate tool where a landlord or a business owner has complete primary records. That banking test is a method of last resort, and it's only available when the records that have been presented to you are either unreliable or no evidence has been presented to you. For you there, if you have kept your tenancy agreement, you have your rent receipts, you have your bank reconciliation, you have all your expense vouchers indicated clearly, and you can be able to support every deposit that has been made in your bank account and be able to account for that, you have nothing to fear from KRA. If you keep your records, KRA can't go to your bank and decide every deposit that is there is taxable income. Whenever you present your documents to KRA, the pendulum of proof becomes your friend, because it's now up to KRA to prove that your documents are incorrect. Once you have produced evidence that accounts for your bank deposits, KRA has to critically examine that evidence. Blanket assertions by KRA that you have not proved your case beyond reasonable doubt are not enough. And the courts have stated this clearly. And remember, security deposits that have been received from tenants are not to be treated as income. If KRA comes to you, applies the banking test, and has included any on income that you feel should not be chargeable or has excluded expenses that you have properly accounted for, you have the right to appeal that. If you are a landlord who has received an assessment from KRA that you feel is incorrect, reach out to us. We help landlords prepare reconciliations that properly account for all deposits made. And we can help you to challenge these assessments by KRA so that you can get your money back.